Derrell Peel, our livestock marketing specialist, joins us now. And Derrell, as we think about turning the corner towards spring, those markets still looking pretty strong?
Absolutely. These feeder cattle markets have been remarkably strong this spring. It's early. It's a little bit ahead of when we would normally expect to see the spring peak, if you will. And that's sort of a question right now. Given how much we've already advanced these markets, do we really expect them to continue on up towards higher levels yet for the spring? It's certainly possible. It's also possible that what we have done is just move the timing up a little bit, and that we may see these markets actually, I don't expect to see them drop, but they could level out here and moderate a little bit as we go through the next month or 6 weeks. So there's potential for them to go higher yet, but we're at awfully high levels this early in the spring.
Now we talk about these high prices. Does that necessarily translate into profits, which of course is what everybody wants?
Well, high prices makes it easier to have profits, but it's certainly no guarantee, and obviously it depends on the cost side of things. As you look at the different sectors in the beef industry, I think you see a real distinction here in parts of the industry. The high prices we're seeing today, it really favors the cow-calf sector. We do think there's profit potential there. Obviously, costs vary a lot among producers, but in general, there's a lot of profit potential there, and that's what the market's trying to do, is encourage that heifer retention and herd rebuilding as we've continued to liquidate cattle numbers down to the levels we have today. Similarly, at the stocker level, we're still using forage-based production. If you look at, even with these high prices, we're paying for the animals, but when you figure out the in values and the out values, the value gain's pretty good. So I think those two sectors have significant profit potential. Gets much tougher in the upper part of the industry. Feedlots are paying record high prices for feeder cattle, very high prices for feed and cost of gain at the feedlot, and they're going to have increasing difficulty going forward maintaining animal numbers as feeder supplies are very tight. So tough margins there, and similarly at the packer level, very limited margins. We're pushing prices up from the bottom, but there's limits on the top side in terms of how much and how fast they can go up. So the packers are being squeezed at that level. So you've got that sort of distinction there with poor profitability at some sectors and decent prospects at other sectors.
And this time of year, of course, we talk about the wheat pasture. First hollow stem is here. How have the cattle on wheat looked in Oklahoma?
It's been an amazing year. In October, we didn't think we were going to have any wheat pasture. Since then, we've had almost perfect conditions for wheat and wheat growth and winter grazing. And so the cattle that are out there, even though the numbers are down compared to what we might see in a more typical year, the cattle that are out there have generally performed very well. The wheat looks good. The gains have been good. The only real problem we've reported this spring is there have been some problems with bloat because of the lushness of the pasture that we do have out there. But short of that, it's been a pretty good year for those cattle that are out there.
Okay, Derrell Peel, our livestock marketing specialist. Thanks a lot.
You bet.